So now we have identified what our support is. We have identified our resistance, right, on the stock price chart, right? And now we want to identify like, okay, so if I were to buy the stock price, right? If I were to buy shares and the price, because I believe that this stock is going to go up, what price would I buy it at? So this is what I tend to do. I will zoom in, and when I'll zoom in, I'll look at the actual price on the 20 SMA and the 5 EMA, right? So these are just moving. These are just moving averages. This is the 200 simple moving average. Anytime the stock trades above the 200 simple moving average, I believe I said it earlier, the stock will bounce up. If there's a cross that happens here with the 5 EMA crosses over the 20 SMA, typically the stock will go higher. If there's a cross in the MACD, typically the stock will go higher. And the RSI is close to 50, has been trending towards 50 after going towards its after bouncing off of its lows in the 30s, right? That's the relative strength. This is the relative strength. And then the other key indicator is that there is a bullish engulfing candlestick pattern here that has formed. Now, granted, this candlestick has not overwhelmed the previous red day, so that gives me caution. But because that this has formed, it allows me to look or at least investigate to see where I would even buy this. Right? So we see that the 20 SMA says 1210 is the price. See that the 5 EMA says that 1217 is the price. And I'm looking at it over here. I'm just highlighting the line and seeing it on the y axis of the graph. So essentially, between 1217, 1210, that'll be a good price on the day, right? So now I'm like, okay, well, that has formed. I'm trying to look for any downside. So I go to the hour chart. I say, all right, so what does it look like in the past hours? Like, how it look on the day. You see that it was pretty much trading sideways on the day, but pretty much in the past 180 days, it was trending below the 200 SMA and trading with it for some time before going down a little bit lower, and it's trading with it again. Well, it traded below it and now trading above it, and trading just slightly above the 200 SMA price of 1191. Now 1191, let's zoom in, is about, let's say, okay, so the reason why I said 1191, the stock price should go to 1191, is mainly because this MACD has not crossed over. It has not significantly shown that the momentum has changed, while the RSI is also decreasing. Now, could it possibly bounce off of 1191 again before going up? Yes, that can happen, right? But also know that the downside risk, right, where we know that major support has been holding, is near 1117, 1115, right? So have that in mind. So when we go to the minute chart, we see that all day it bounced off well, not all day, but it bounced below the 200 SMA before crossing above it to close out the day. The past couple of days, it's had um, it's had some good movement, right? It's been trading above the 200 SMA. It's been trading above it for quite some time until really, you know, pre-market yesterday, or not pre-market, after hours yesterday, pre-market this morning, pre-market Friday morning, and then trading sideways, right? Um, so with that being said, I typically don't count the price on the 5 minute chart, but as I'm looking at it, I see that, hey, maybe this 1230 it can hold, but I am still so cautioned on that downside, the downside to the 1190s, sorry, to the 1190s. because mainly because this 200 SMA is on the downcline, on the decline. So this is decreasing. This is on the downward slope. It gives me caution to say, hey, I'm not going to rush into buying this, right? Also, as I bring this back to the year chart, also when I look over on the options, because I do like the options has a couple of price points too, just like the moving averages that I try to take in consideration of. So to keep the point clear, if I were to buy any shares in this stock, I would see if it tests 1190 first before and test 1190 to bounce before even buying in, because I believe that it can go a little bit lower, maybe to the 1170s, before going back higher, right? And so 1190, that would be a genuine place to play it. The stock price is at 1245, and like I said, the moving averages are in the 12s. So if it got to 1190 on the day chart and still held its relative momentum and strength, I don't see why not on the share price. Now on the options price, different story. Like right now, I'm seeing a red candlestick on the day, even though the momentum has changed. Momentum has changed, right? And the RSI is not oversold. It's still pretty low, right? On this low candlestick, red candlestick. Why is this so red versus a day that pretty much was like, green until, well, it was red until the green, or until it became green at the end of the day. So, um, I wanna know. So I'll go to the hour chart and I'll see. Well, it's holding support. It's holding this 35, 30 cent support area, right? It's holding that. Um, it also is have some resistance probably at the high 50s, like 60 cent area, right? So, not 100% sure on the day. I look, it's like a couple of candle. Like, what is going on here? Like, what is this? That's because the volume is horrible. The volume on the options contracts are horrible, right? So this is your option chain, right? You'll have a series of contracts that extend, not just in November, but going up until January 23rd. That's what I see that's available, right? Um, so yeah, so we have these contracts, and with these contracts, we are investigating the underlying price of the share price stock, right? So you see the prices at 75 cents and 80 cents, $1.10, $1.35, right? You see these prices; these are nice and cheap for a stock that's trading at $12.45. But the one key value, very valuable characteristic that a stock should have is volume, right? This has no real volume going through it. So let's just say that that contract that was up on the chart, right? So let's analyze that contract. Right? This volume is horrible. So would I want to risk money on a low volume stock? Not 100% sure I would want to do that. Only unless I have, without a shadow of a doubt, that these earnings are going to come out extremely good, right? So I'm looking at this stock, and I'm like, okay, maybe you have some type of value. Let's see what type of contract you are, right? So what I did is I just moved the November 20th $14 calls. That's this chart right here, right? So when we come here, I click the November 14 calls, right? This is the strike price. I'm calling November 14, right? And the volume was 89. That's the most out of the contracts that are out of the money. That's the most, right? The open interest is at 53 or 539, and the bid and the ask is at 40 and 55 cents, right? So I already said that, hey, it's holding support around that 30 cent, 35 cent area. So that's where some of these bidders are going to be at. Well, people are going to be asking for 55 cents per contract, which I could see it going to resistance, but I don't know how far it will go after that without some type of formidable news, right? So we see also that there's relatively no volume on the put side, right? On the put side, it shows that this is absolutely horrible. But one thing to always keep in mind is that and the puts are just saying that they're betting that the stock will go down, right? But one thing to always keep in mind is how the price looks, right? And this is how lumber liquidators was too. Even though they had their volume was pretty illiquid, you'll get these spikes where the stock will just run up and off of relatively low um, contract, low option volume, but the share price is moving. So, that is one good thing. Another good thing is that you'll have these delta, gamma, and theta and vega, right? This you get to add in. This is a dope way to maximize your return, because for every time that a stock crosses over the whole dollar mark, it gets the delta and the gamma added to it. Every time that the stock is held a day, the a theta is subtracted away from the price, from the option from your option price, right? So this gives in addition to what you want. So like, let's say that, hey, we do buy the 40 cent contract, or 45 cent, uh, maybe 50 cent, right? And I'll get to why I said 50 cent, maybe a safe, uh, the last safe price to buy it at, right? Um, so let's say you do get that 50 cent contract, and then it goes up to $1, right? So once it crossed that whole dollar, not only did you get the dollar, but you're getting the 60 cents and the 15 cents on top of that, right? So that gets added there. I love Brooklyn. Whoops, I said 15 cents. I'm sorry. Wrong one. I was looking at in the money. Sorry, I wasn't looking at out of the money. So out of the money, you get the 32 cents and the 14 cents added together, and once it cross over the dollar, and it only goes the delta only goes higher as the contract develops more value, right? So the delta will continue to go up higher and higher. Um, so with that being said, I still would not buy it any higher than 50 cents a contract. Why is that, Jermaine? Well, essentially, we see that on the year chart. We see it on the year chart, right? It closed at 46 cents. We have this, I think this is the 5 EMA. No, this is the 20 SMA. This is the open interest, right? The open interest is pretty high. The open interest is over here near $2.30, while the EMA and theoretical price, I believe that's the purple line. Like, I'm still trying to get used to some of the technical parts of the options. But yes, that's the purple line is the theoretical price, and that's in theory saying that, hey, we in theory believe that 55 cents is a reasonable price for this, well, for this contract, right? So, and then the 5 EMA is 52 cents. So the 52 cents is below the theoretical price, right? And I want that 5 EMA to not only be above the theoretical price, but I also want it to be above the um, the 20 SMA, just like over here. I want the 5 EMA above the 20 SMA, because that's how the stock runs. That's how the stock moves, just like back here, right? So if I want that, what's good for the stock price is good for the option price. So I want that to cross on over. As you can tell here, the relatively low volume is not giving us any type of indication that that would possibly happen. But there are indicators other outside the volume that are saying that, hey, maybe it's possible that it could retest, or not retest, but it could test this 90 cent area where the 20 SMA is. Yeah, if it can fill that gap, that would be amazing. The only thing is, where I say 50 cent is probably the only area that I would, after that, it would probably be like too late, is because, once you have a stock that is going into earnings and you don't have an opportunity to the, get into a position before news released, and it's happening during during closed market hours, during the closed market hour time, then it's going to be harder to even know if the stock is going to be in the 70 cent area or 80 cent area. It might be overbought by that time, so at that point it's going to be hard, right? So I am never a proponent for buying a stock before earnings are released, particularly with stocks that are in the biotech area and that are related so heavily onto COVID, because who knows what other news that might be released that, hey, their numbers might be fine, but news related to the data in their research with their vasal nasal with their nasal testing would be, so it probably doesn't come out as good, right? It probably be something really really bad. So this is something that 50 cents, like, yeah, if I got in around 50 cents, because that way I know that, hey, it's a green engulfing candlestick too, so it's engulfing this red, and it is showing that it's holding support. So that would be the only reason that I would say, hey, maybe you'll buy in at 50 cents. But other than that, if it was a regular trading day and they didn't have any earnings coming out or anything like that, I would say, look, maybe the 30 cent area might be that good buying point, because at that point you know that you bought near support. Um, and that's what that being said. So I think I said enough. I think I've done enough. As my throat needs to be cleared. I need to drink some water. Um, but thank you for listening. As I drink some water now. Thank you for listening. Thank you for taking in all of this information. This is a way that I process all the data, synthesize it all into one, so that I can figure out if a stock is worthy of my time. And I process it a little bit faster than what I explained it. Right, it took me roughly 40 minutes to explain all of this, but at the same time, I was giving you ideas of what the stock price chart looks like on its actual chart compared to an options contract. And granted, I only picked one contract, I only picked November 20th, right? You can believe that this stock can go higher. Excuse me. You can believe this stock can go higher up in March, right? Because you say next year, this stock will have grown to an opportunity to eliminate COVID, right? To eliminate the drops that might happen when people sneeze or cough or even talk, right? So you might say that the volume is extremely low, but that doesn't mean that the contracts are not available, right? You're right. You can assess your own theories on the news that you've gathered up until this point, to one that is encouraging you to trade, that's encouraging you to invest your money in a company that you can believe in, right? So it's just a matter of taking the time to say, hey, go and you want to do this research. You have the opportunity to really assess the price point, right? Based off of what it did in the past. Was it a previous spiker, and why? Um, what technicals is it adhering to? Is it above the 200 SMA? Did the 5 EMA cross over the 20 SMA? Is there a bullish engulfing candlestick pattern formation? Has the MACD cross showing a change in momentum? Has the RSI bounced off of support and showing some type of strength to the upside, right? Once you start putting those together, and in addition with the overall market news, in addition to um, in addition to the market news, in addition to the industry news, industry, once you start putting all these things together and you build your analysis, your thesis, then you say, okay, I can buy this stock at 11.90 per share, or I could buy this contract at 50 cents a share. Acknowledging the downside risk, 30 cents, upside risk of a dollar almost 95 cents, or the upside risk of $14 versus the downside risk of 11.70, right? So these are the things that that you should take into account, right? Hopefully that this all made sense. Please drop a comment, a like, down below. Definitely, I love talking about these things. I love enjoying just sitting down and being able to analyze companies and see what direction they can go. But until the next video, hopefully the next stock that I analyze will be worth the time. But at least we'll see now that how to eliminate a stock if this is something that we do not want, to trade because it doesn't fit certain parameters, or you have to wait for certain events to happen, like news to be released, to really make a determining factor. But at least you have a game plan, and the game plan is always necessary. So